Good evening. This is Tony Cherniawski, President of the Practical Investor. I just thought I'd weigh in on my observations of the market today without any props or charts for the moment. I'll get back to those later on sometime, but in reality, if you've looked at the prior videos, you'll probably understand what I'm talking about. The first thing that I want to say is that this market has been very bearish for the last 2 weeks. It's been barely able to get off the bottom of the charts, and so I had been expecting to see a rally. In fact, this morning in a commentary to my subscribers and other money managers, I suggested that we would see a rally possibly up to a very strong resistance at 929 in the Standard & Poor's. That rally didn't occur this morning, so naturally I let my guard down as we went back down to 845 in the Standard & Poor's. That was a pretty significant low, even though it wasn't a new low for the year. The point is that we were near that low right around 2 o'clock or so when an announcement came out from Doug Cass at CNN Money suggesting that Larry Meyer had announced that the Feds would probably cut 50 basis points, that's 0.5% tomorrow, and we're prepared to cut another 50 basis points on the Fed funds rate probably in December. I found that the timing of that was very disingenuous. The result of that announcement, I believe, is what caused the rally to go from 875 to 940. In doing so, it sparked the hopes of a lot of people and brought a lot of new people into the market that had been staying out because of the continuous decline. Now, I have a problem with this in another way as well, and that is that the American Association of Individual Investors came out with their report on investor sentiment today and announced that roughly 55% of all small investors were bullish on the market and were weighing back in on the market. I find that this hardly marks a bottom in the market. Bottoms are usually marked by bearishness of 55% or greater, not bullishness of 55%. So there's a huge discrepancy here that smells. Literally, this thing does not happen. And I just want to make people aware that sentiment is usually the opposite of that at a market bottom. Now finally, two other things that I would point out. One is that the rally took us up. If you look at the 5-wave move ending starting at 985 and ending at 875, this rally went almost exactly up to the 0.618 Fibonacci retracement. This is a hallmark of a classic retracement rally and not the beginning of a new bull run. So if we just halt at 843, or excuse me, 943 or below, 943 happens to be the 0.618 retracement. We stopped at 940 at the close of the market, and as a matter of fact, after hours, the market's been selling off. So I find that that there's probably just a little bit of foul play going on here with the timing of that announcement. Finally, I also want to bring in the veracity of that announcement. I immediately called Tim Wood from cyclesman.info. Tim Wood has information that goes all the way back to the 1890s on the Dow, the bonds, oil, gas, you name it. He is a veritable storehouse of information and statistics. So what we did is we took a look to see how many times the Fed lowered interest rates in an environment such as this. What we found is that since 1946, the Fed has never, I repeat, never cut rates when the spread between the discount rate was less than 1% over the 90-day Treasury bill rate. Today, the T-bill rate is 0.77 and the discount rate is 1.75. What that says is if the Feds do cut rates tomorrow, that would be an unprecedented move, never done since we've been keeping track of this since 1946. That might have some totally different implications if they do indeed cut rates. By the way, the implications are there might be a little bit of panic at the Fed, not the other way around. So let me just say that we're dealing with information here that is very volatile. We're dealing with high emotions at this point. People would love to see this rally begin. I've been getting the equivalent of, Daddy, Daddy, are we there yet? Being the father of 7 children, I can understand the situation on long trips. This has been a very long trip. But to my estimation, thus far, the information says that this decline is not over yet. We need to prepare ourselves for further declines here, possibly beginning as early as tomorrow. And if you go back and view the other videos, get familiar especially with flags at half-mast over the markets. By the way, I can be reached at tonyc@thepracticalinvestor.com. It might take me a day or two to reply to your emails, but I'll do my best. And if you need any more information, at the same time, I'm just saying this is my view of the market. I'm not offering or suggesting that you buy or sell anything at this point. I am just suggesting that what I see in the market is far different from what's being announced by the media, and what I see needs to be told. So thanks very much. Have a good evening, and do the right thing.